be looking at the commodity performance, soft commodity performance, whereby it had a poor month in October with the prices of maize and rice all slumping, while wheat and sugar made minor gains. Coffee, on the other hand, was the worst performer, with Robusta falling 7.4%, while Arabica, on the other hand, was up 6.4, was down 6.9 points in response to signals of ample and rising global supply for both beans. Now, for more on the soft commodity prices, we are joined by Edward George. He's the head of soft commodities as head of research at EcoBank. Many thanks for joining us, George. Give us a clear indication in terms of how the prices performed in the month of October, which is the latest that we have.
Well, basically, it was a very poor month, as you said, for coffee. The ICO indicator was down almost 7%, and of course, Arabica was one of the worst performers. This really reflects the fact that there are ample supplies of both Robusta and Arabica beans on the market, and the likelihood that more will come as well. It's the same story for sugar, which is really struggling to increase prices as we're heading for a fourth consecutive global surplus of sugar. But there are some signs of changes. I think there is a possibility of a brightening outlook for Arabica, because now the arbitrage between Arabica and the cheaper Robusta has narrowed considerably, and it now looks like some manufacturers are going to switch back to Arabica coffee. The only real bright outlook for any soft commodity is cocoa, and that really is because despite the fact there's been a strong start to the harvest in West Africa, there really is ramping up demand across the globe for cocoa, and this will probably see prices rising further towards the end of the year and going into the first quarter.
Edward, let's put this into perspective with starting off with coffee, which has the lowest prices since 2006, and put it into perspective with a country such as Uganda, which is a major producer for coffee. Maybe you can give us an indication, in terms of perspective, how is that market faring in terms of coffee production? Because we saw it having a record season, the previous season. How can we see this season faring?
Well, it's a very good outlook for the Uganda coffee crop at the moment. Uganda is the largest exporter of Robusta in Africa, and despite the fact that its production is smaller than neighboring Ethiopia, the Ethiopians consume a large amount of their own Arabica production. So what is interesting to see with Uganda is there is a structural shift underway with a lot of the exports. Around a third of the exports last month were to Sudan, and we're seeing increasing offtake of African coffee in North Africa and the Middle East. And this is a positive development if you bear in mind that the international prices have been very weak. But not all countries have escaped the impact of poor prices. If we look at Cameroon on the other side of Africa, there is a severe crisis facing the cocoa and coffee sector. Coffee production was down 44% over the last season. The current season has started very poorly as well. And there's a real question here that if something can't be done to address shortages of inputs, lack of financing, and very poor farm gate prices, we could see the coffee sector disappear altogether from countries like Cameroon.
Talking of the coffee sector disappearing altogether, as you mentioned there, now we have Burundi farmers now shifting to other crops like bananas, which are more lucrative, seem to be more lucrative, and they're abandoning coffee. For you, what are some of the signals that you're reading from that market and the impact it's likely to have on production of coffee?
Well, it's not just coffee we're talking about here. As you rightly state, in Burundi, they're expecting a very sharp drop in coffee production, which is mostly specialty coffee for the international market. A lot of farmers are choosing to switch out of certain crops simply because they're not getting a decent price for it at the farm gate. And of course, it depends on the crop. It's very easy to switch, for example, out of cotton into maize, relatively easy to switch out of tree crops. But if you're talking about something like palm oil or natural rubber, it takes a lot longer time. So I think we're seeing across the soft commodity sector, certain governments struggling to keep farmers in the sector if they can't protect the prices that they're receiving. And I think that's why we're seeing, particularly in countries like Côte d'Ivoire, a concerted effort by the government to ensure that farmers receive at least 60% of the international price. But it's not all been plain sailing.
Of course, the same is also happening in Kenya, whereby we've seen a lot of farmers also abandoning some of these cash crops for real estate projects, which seem to be having better returns. But now let's look at Tanzania, whereby we are seeing cotton production is also expected to slump this year, and also it's attributed to the very low pricing that we're seeing. How then do you see that affecting that particular market?
Well, it's very disappointing to see Tanzania's production down by almost a third in the season that's just finished, and the outlook for the next season is that it may fall even further. When people think of cotton in Africa, they usually think of the Francophone West Africa zone, the CFA Franc zone, where cotton has traditionally been produced in Burkina Faso, Mali, Benin. But in fact, there is a very important cotton production hub which is developed in southern and East Africa, and Tanzania is the largest of those producers. So it's a worrying sign for the region, particularly as in Zimbabwe there is also a bit of a crisis going on in the agricultural sector. Again, it's the question of low prices which is driving farmers out of cotton, and of course the ease of moving out of cotton into other crops, cash crops like maize, makes it much harder to keep them in the market. Ultimately, the government in Tanzania has set up a special fund to support farmers. They are very heavily focused on this, but perhaps of even greater concern generally for the cotton sector in East, Southern and West Africa is the low level of processing. Africa is still exporting around 70% of its cotton raw. Most of it is going to China, where it is turned into textiles and thread, and ironically a lot is being exported back to Africa as textiles. So you might have Tanzanian farmers who are wearing Chinese-made shirts made with Tanzanian cotton. So that's perhaps an even more serious long-term structural issue that needs to be addressed for the cotton sector.
Of course, that would not be a wonder. We have seen a lot of Chinese coming into the African markets, and that would, of course, be one of the reflections that we're seeing in terms of how China is penetrating the African market. But now let's shift gears and look at maize, which you mentioned earlier. And East Africa is said to be staring at a shortage of maize, and that's a staple, especially in the Kenyan market. And some of the markets that we're exporting from are also having an issue in terms of restrictions that they're putting on exports. Maybe you can give us an indication how that is faring, and how we can expect prices to go on going forth.
Well, I think it's a very worrying situation in Southern Africa. We've seen that, and East Africa, we've seen that Kenyan production is going to be down, or is going to be short around 6 million bags of maize, and Zimbabwe is looking at a 1 million ton deficit of maize this season. The problem is that the usual surplus producers in the region who tend to fill up these gaps, Malawi and Zambia, have actually had lower production this year. They're forecasting lower production going forward, and they've put restrictions on their exports. Now, Zambia has offered to export an emergency 150,000 tons of maize to Zimbabwe to meet this shortfall, but most of that maize still hasn't arrived yet in Zimbabwe, and it's very unlikely that Zambia will export any more. This means for a lot of the countries in the region, we're looking at severe food shortages in certain areas, but also the need for governments to go to the international market to buy maize. This means they'll be paying a lot more for it. So I think in Southern Africa, we're looking at a sharp rise in maize prices going forward, shortages, and the need for emergency measures by the governments there.
George, very lastly, and a very brief answer, are we likely then to see inflation shooting up in some of these economies that you've mentioned?
Well, I certainly think for food inflation, yes, we will. We will see food inflation, particularly for certain foods. But the important thing to remember is that there is always substitution. If it turns out that maize or mealie flour is too expensive, you might find locals switching to other local produce, cassava, maybe they'll switch to bananas or rice, some other kind of food. So all the different prices will be reacting to each other, but there is no doubt that generally there is a severe deficit facing Zimbabwe and a big deficit facing Kenya, and they will need to find some means of meeting that gap.